This roadshow is brought to you by ResearchBytes.com.
Good afternoon, everyone. Thank you very much for being here once again for our Q3 earnings. As usual, we'll start off with a short commentary from our CEO Chandra on the quarter, and after that we'll take questions. Chandra, can I?
Let me start by wishing you all a very happy 2017. And I'll straight away come to giving you a summary of our December quarter performance. It has been a very good quarter, both from the point of view of the numbers and also from the point of the metrics footprint. We had indicated during the last earnings call that our Q3 performance will be better than last year Q3 and possibly will be better than our Q2 performance. We have delivered that. Our constant currency growth for the quarter is at 2%. And our rupee growth is 1.5%. And we had a huge cross-currency impact, so the dollar growth is about 0.3%. We have come in extremely well on margins. Our EBIT is in our range at 26%. And our net profit is at 22.8% and touched $1 billion in a quarter for the first time. Our other operating metrics from the key industry segments point of view, financial services BFSI did extremely well at 2.1%. Retail did extremely well at 1.9%. And all other sectors have done well. We've had a bit of softness in the communication industry in Europe. And we have had some softness in the healthcare in the US. Both are one-off, nothing as a trend. So I believe all our industries are doing very well, and insurance also has started growing again. From a geography perspective, we have done exceedingly well in US and UK, and I had indicated that there will be a good growth in the India. Both India and Latin America delivered double-digit growth on a sequential basis. Then with respect to deal wins, again it's a very good quarter with 9 deal wins, pretty distributed across industries, 3 wins in banking and 2 wins in retail, and 1 win each in manufacturing, utilities, travel, and government. From a market perspective, Europe came up with 5 deal wins and 2 each from North America and Asia. And our cash flow performance has been an all-time best. We delivered an operating cash flow at 120% almost of our net profit, and our free cash flow at 1.1 billion, much ahead of our net profit. And our attrition trended low at 11.3% for IT for the 5th consecutive quarter. And our gross addition of employees and the net addition of employees are pretty strong, with almost 7,000 people net and almost 18,000 people gross. And as we look into the future, as I indicated in the last quarter, the 3 or 4 areas which were troubling us, I said that we are past their bottom, and I believe that we are on a growth curve in those areas as well. So broadly, we believe that all our industries, all our services, and all our geography markets are doing well. And there will always be some one-offs, which is unexpected, which we cannot discount. Especially emerging markets, whether it is India or Latin America, have always shown volatility. So we should expect that volatility. But on a yearly basis, when you look at it, the curve is going to be on the rise. So we feel pretty positive with where we are. I'm pretty sure you have questions on visas, which I will take it when you ask. Otherwise, I will now turn it over to you to ask questions. Thank you so much.
Thanks. First up, Kritika from CNBC.
Hello. Congratulations, management, for a good, steady set of numbers. My first question is something that most market watchers are watching for. 2016, FY17 so far hasn't been as great a year for IT. What is the sense as far as client budgets is concerned? What are the problem areas that are around the corner that you are preparing for?
See, I've always said that first we have to look at our company, our client portfolio. And last almost 4, 5, 6 quarters, we have had one headwind or the other. We had issues with telecom. We had issues in Japan. We had issues in Diligenta. We had issues in Latin America. We believe that we have overcome those headwinds. I really feel that the transformation to digital is real. Every company is on the journey to adopt digital in a big way. The problem is not in terms of adopting technology, whether it is analytics, whether it is cloud or any of the other technologies. The transformation to digital in a holistic way requires companies to transform themselves to the agile DevOps continuous integration paradigm. And that's a big process. And change agents are required in each company. And customers are talking to us on how they can transform themselves to an agile DevOps company. And so that shows tremendous opportunities. So I believe that our investments in digital, our investments in building the right skills in our people is positioning us extremely well to capture that segment. From a headwind point of view, I think there will be some visa regulatory changes, and there are two possibilities, especially when you look at the US visa. One, with regard to the visa fee, and there is a lot of commentary about the increase in the visa fee. The second is a commentary on the number of visas one will get. I think we are addressing both very proactively. In terms of the number of visas that we will get, we decided almost more than a year ago that we have to operate in a visa constrained regime. So from 2015, when we used to apply for about 14,000 visas, we applied only 4,000 visas last year. And 1/3 of that or roundabout is the number of visas granted. And we have been able to successfully execute by making changes to our business model. So we believe that we are preparing ourselves well to handle a headwind should it arise. On the cost side, we have 3 types of resources. We have expats who are deputed to the US. We have local nationals we hire in every market, including the US. And then we use subcontractors. And we have taken steps. The cost structure of the 3 different resources, there used to be a huge disparity. And we are aligning those cost structures by getting the right mix and leveraging also our nearshore centers and the global centers. So while there will be a headwind, and we are prepared to handle that headwind on that count. So these are the 2 major areas in which you can face headwind, and that's what we are doing.
Okay, so just from that point of view, Rajesh, pricing pressure thereby will continue. So what is being done to be able to maintain margins? By when will you be able to, 26 to 28% is a band that you aspire to remain within. So by when will you be able to reach a band or reach a structure where you will be able to hit the higher end of the 28% margin, keeping in mind the pricing pressure that is there?
So most of what Chandra said actually has got nothing to do with pricing pressure.
Correct.
In fact, the move into digital and the continuous investment into new technology and the demand for new technology and services actually is supportive of pricing in the longer run. So as we churn our portfolio more and more into digital, you will see strong support coming in on that. And even in this quarter, we are looking at a slight pricing uptick or a realization uptick. So as we have said, pricing broadly is stable. Different parts of the portfolio will behave differently, but in aggregate, we don't see pricing pressure of the nature that a lot of the talk in the industry has been on. And I think our performance over the last few quarters has borne that out. I would say, our outlook on the margin continues to be similar. We are focused on maintaining the target band, and it will depend on how things turn out. But if we maintain a strong growth momentum, that will provide us the margin support that we need.
Will there be pressure on margin in near term then?
There is always pressure on margin, near term, medium term, always. But it's a question of where does the growth come from and what does the cost structures move on. Sudden spikes in cost structure, let's say coming in from volatility in currency or some other pressures that can come in, can cause the margin to move up or down in either direction. We are talking about more of what is our long-term sustainable band, and we are fairly confident about it.
Okay, Chandra, the first question, client budget, is there an uptick or is it flat right now?
Last
2017.
I think I can't give you a very definitive answer. See, it's not the overall budget. Where the budget is more important. I think there is a significant budget in digital, and there is a significant market share gain opportunity in consolidation on the traditional business. So our addressable space and opportunities is pretty good. Okay, so we need to continue to win in both spaces. The consolidation space, our tools are managed services, robotic process automation, cognitive automation, machine learning, Ignio. All of this come into play, and that achieves productivity, that achieves scale. On the other side, on digital, the opportunity is all pervasive across user experience, across getting customer insights using analytics and machine learning, and then building a pure, true digital company by making data real time. So across the board, there is a big opportunity, and we need to capture that, and I think we are well prepared.
Okay, lastly, as far as BFSI is concerned, is there a cyclical recovery that you could see in sight over the near term? It has been good this quarter. Can that continue? And digital quarter on quarter, what's the growth that you're seeing? How sustainable, or what's the scale that you can look at? I understand you can't give guidance, but...
So I'll give you answers to both questions. Digital quarter on quarter is 6.6%, and annual year-on-year growth is 30%. So digital is doing well and will continue to grow on a good trajectory. On the issue of BFSI, I had said that actually, I think in the last analyst call or in the last press conference, that BFSI is looking for investments, primarily because they have been on a journey of spending money on regulatory compliance, on cost takeout, and shrinking the institution for the last 5-6 years. Now they are ready to grow. For that, they need to introduce new products and services, new digital channels, new insights they have to get with analytics. So all of this means that they got to invest in technology. And I think that cycle is happening now, and I'm pretty confident about the uptake in BFSI. I don't think it's on off.
Thank you. Ashwin from ET now.
Thanks. Good evening, gentlemen. Congratulations on a healthy set of numbers. Let's see what's left. So you have BFSI, and at the cost of reiterating my friend's earlier question, BFSI has been a spot of bother in the last few quarters. It's always been a sector wherein questions have been asked, and you started off by saying that BFSI has been healthy this time. if you look at BFSI and retail, they constitute a healthy chunk of about 54% of your revenues. Can we expect this trend to continue, and what has led to your optimism relating to the BFSI sector in this quarter?
We delivered a 2.1%, which is growth higher than the company average. So I should feel good about it. That's the simple answer. The second thing, I can only pick trends. I can't really get into a particular trouble spot. But if you really look at it, the BFSI industry has been on a cost takeout and a regulatory compliance regime for a number of years now. And the banks have shrunk, and everybody is looking to grow. For that, they are introducing new products, new services, new channels, and everybody is becoming data-driven and customer insights-driven. And the two themes I said is pretty much true in BFSI. They are trying to take headcount and cost out through automation. And on the other side, they are investing hugely in growth initiatives. I don't want to just say digital alone, a number of growth initiatives. And all of that will turn into opportunities, and TCS is the number one company in the fintech space. We maintained the ranking for the second year. Globally, we are number one, and we have a deep penetration in this market. So as long as we continue to stay close to customers, we should be able to capture opportunities, because we have all the things that it takes. We have our IP, we have domain knowledge, we have thought leadership, we have a huge scale in the BFSI sector, and we've invested in all the right things in digital. So I think it's a natural play for us.
Chandra, you also spoke about the resurgence in the insurance sector during your initial commentary. So can you tell us something more about the Diligenta platform and what's been the performance? Have you been able to arrest the loss making over there?
See, Diligenta has, in the last 2 quarters, the second quarter in a row, or probably the third quarter, definitely second quarter in a row, where it has shown incremental growth, has improved its margin incrementally, has increased its cash incrementally, significantly. And Diligenta deal pipeline is pretty solid, and we are in the very advanced stage of large deals. But when it will close, I don't know. So I think Diligenta is on the right track to deliver good set of numbers in FY18. The larger insurance space, also we were soft last year, and I think the wins as well as the growth we have seen is very encouraging, and the pipeline that we have and the projections internally we have for the coming quarter, all of that are positive. So the combination of both, one, a negative thing not happening, and the core of the insurance trying to grow, should be net positive. How much it will grow with respect to other industries, I can't comment yet, but definitely it will do much better. FY18 will be a better year for insurance than FY17.
Chandra, 2 more brief questions. One is on the impact of the US bill, and there are certain brokerages who have come out with reports saying that if the bill comes into force, there's still some time before it becomes a law, but once it comes into force, it could potentially impact your profitability by anywhere between 300 to 500 basis points. How would you respond to these concerns in the market?
I can't comment on that because I have given you much granular specifics. US bill, what has come and what can come, there are 2 themes. One is the restriction of the number of visas. Second one is increasing the wage bill. And I have told you what our strategy is and how we have already implemented it in the last 1 year. And actually speaking, if you account for the very low number of visas we took, we should have already suffered a huge margin, given that we had to compensate for the lack of those visas. It was an artificial pressure, but it was imposed by us on us because we wanted to shift to a new paradigm. And that gives us confidence that there are things we can do, and there are learnings that we have. And where is automation? Where is the resource mix? where is the location mix. There are tools, and how do we use these tools in every sector is something that the teams have learned, and we will deploy those and we will use those.
Chandra, one last question, and this one is more on a personal note. You know, widely within Bombay House and also within India Inc., you are seen as a leading contender for the top job at Tata Sons. So if the top job as Tata Group chairman is offered to you, are you ready to take it up?
See, let's not speculate. This is a TCS earnings call. Let's keep it to TCS earnings call.
But are you ready for the top job, Chandra?
Thanks.
Let's keep it to TCS earnings call. Okay.
Priyanka.
Thank you.
Priyanka from BTVI.
Hello, sir. Congratulations on your results. So, firstly, I'd just like to give it a try again. You said you are aligning your costs, but going forward, when it comes to the employee costs, in case the rules are changed, but going forward, overall, for the next 1 or 2 fiscal year, 2 years going forward, do you see the employee costs rising? How do you see that going forward?
So let's leave it at this one statement. TCS's margin range at the EBIT level is 26 to 28. We are committed to the 26 to 28 range, and whether it is employee cost, whether it is automation, whether it is productivity, so you can only measure me on one parameter. You can't create 17 parameters which make up that one parameter and then ask me to commit on all the 17 parameters, because I don't know. But we are committed to the parameter of 26 to 28. And Kritika already asked a question, when will we be the upper hand? I think, to be fair, I think we have had soft growth for the last 2 years from a very high growth rate. And in spite of that, we have maintained at the 26 to 28. We are looking to grow higher, and automatically that should push up. But we are committed to the range, and whenever we decommit ourselves, we will be the first ones to tell you.
All right, sir. So, talking about Japan, sir, I see there is a deal win in Q3. Going forward, how do you see it turning out for Japan now?
I think still it is slow. We have work to do.
All right, sir. Thank you.
Sankalp from Reuters.
Hi, sir. Congratulations on the good result. Just going back on how you said that you'd already done a lot of things to operate in an environment where there are visa restrictions. I wanted to know if you're also looking to hire more heavily from US campuses, put in more money in local hiring there. And also with respect to the BFSI, I wanted to know in Europe and UK, have concerns eased over Brexit? Are people willing to spend more in the BFSI space?
See, on the first one, again, I will answer the question, but again you are asking me those 17 parameters. Stick to the output that you want, which is EBIT margin. But to give you a straight answer, we don't have third-party validation, but based on our research, we believe we are the number 1 hirer in the US among the tech companies. And we will continue to hire. Our hiring not only is lateral, we are hiring also on the campuses. The number of campuses that we go to every year is constantly increasing. See, I think there is nothing specific about Brexit now. Okay, so currently, as of now, I'm just taking a BFSI as a whole, and there may be client-specific variations. But otherwise the trends are the same. Some clients have more difficulty than others. Some clients have started doing better. But there is no Brexit related impact in any specific client that I can articulate today.
Varun from Mint.
Hi, Chandra. Four quick questions. Firstly, can you just give us some color on how do you expect Q4 to be? Especially because there are some concerns that with the new president coming up in US taking office on 20th, client budgets may be getting delayed because they would like to have some clarity over what the policy is. So do you see this Q4 to be a lot more different than the Q4 of last year? And will that, if I could ask you that, are you expecting Q4 to be better than the Q4, say, last year? Just like you told us about the Q3. That's the first broad. The second question is, when this year started, at least the constant currency and reported currency, there was not much of a difference. But because of macroeconomic, we've seen this difference get even wider. So again, just like last year, where you had a differential of between 450, 490 bips between constant currency and reported currency, this year, would it be almost the same or would it be less, the difference between reported and constant currency difference? So the third question is, no, if I'm correct, 100 million no deal wins, again, third straight quarter. For a company of your size, is it a worry? Because how do you expect to grow if you are not really getting more 100 million clients? And fourth, last question is, sir, July, September of 2015, if I'm correct, you mentioned that how your order book is 30% more than it has ever been. But over the last 1 year, that really hasn't translated into growth. Is it something structural that maybe as more outsourcing deals are coming for rebids, which you may be winning, but their size is a lot less? So even though your order book was great, but your rebids when you are winning business, that in itself is a lot less. Is it how we should interpret it, sir?
Okay.
Thank you.
Thanks, Saurabh. The first question, I think normally I don't give statements like next quarter will be better than last year, next quarter, etc. I made an exception in Q3 because of two reasons. One is it was such an unusually poor quarter where we delivered in Q2 a 1% constant currency growth last quarter, which has never happened for us. So I had to explain a couple of soft spots, what happened in retail and what happened in India. And then I said to them that the India thing is going to come as what we didn't get in Q2 will come in Q3. And retail will probably, some of it will come in Q3, some of it will come in Q4. And both of those factors will definitely ensure that the Q3 of this fiscal year is going to be better than last fiscal year. That is the basis and context on which I made that comment. And this time around, luckily it came through. Otherwise, you would be grilling me slightly differently, right? And at least I got saved there. But with respect to Q4, I think nothing unusual it's going to be. It's going to be a normal Q4 because I do not expect any one-off gains or anything like that in Q4. So I do expect that it will follow the normal trend, I believe. But one of the other questions you asked me, I take your last question to answer next, then I'll link it to this. See, I did make that commentary, whichever quarter, whether it is in 2015 Q2 or Q1. I remember that statement I made. You see, unfortunately, the problem was not the order book. The problem was, I've explained this multiple times, I'll explain it again. We, in our business, have almost 80-85% of our business in a steady core areas. About 15%, roughly usually, is nascent businesses or businesses that have to gain scale, whether it's India, Latin America, Japan, Diligenta. These are businesses that see volatility. In the past, we will have volatility, but we never used to have a situation where if you have 4 or 5 making up this 15-20%, we never used to have a situation where everything is volatile. But what we got into during the last 4 or 5 quarters is 3 or 4 of those was not only volatile, they were just continuously degrowing. While even though we were doing exceedingly well on the big pie, and this degrowth was quite strong that we couldn't post the numbers normally we used to post. That's the way to interpret it. It is nothing to do with the deal size, deal wins, etc. Whether it is the large contracts, large deals, etc., are all intact. The third question about the 100 million, it's not the 100 million deals. We do win a lot of 100 million deals, even 200 million deals. The 100 million, see, there are two things that are affecting us. The two other questions you asked, the gap between the constant currency growth and the reported. Whenever you say reported, you mean dollar. Everybody else means rupee. So I get very worked up whenever I read your column because you always write dollar. Okay. And for us, the reported currency is rupee. Our dollar is, we reported dollar because investors are in dollar. But we are listed in India, our reported currency is rupee. Now, the problem of the currency fluctuation and the currency headwind has been just too much for us to cope. And we have never had a situation where between the CC and dollar, 5% drop. That's what happened last year. And otherwise, if you go back the last several years, it is a 1%, 0.7%, this way or that way. This was a 5% drop. Take for this quarter, the constant currency to rupee is a dip, constant currency to dollar is a dip. At the beginning of the quarter, I thought constant currency to dollar, we will do much better in dollar. So our dollar revenue is going to be excellent this year. But as the quarter ended, I've lost 170 bips, which on my case, it is almost $75 million. And if the same thing is to repeat next quarter, it's 150 million. If 150 million drop, I've already lost 1% in dollar reported just because of the fluctuation in Q3 alone. I've lost 1% growth. So, I mean, any amount of intelligence I can do, I can never fix this. I can never, unless I make a policy change that I will report the dollar, some financial assumptions we have to make and some policy change we have to come in the work with somebody. But actually speaking, it's very difficult for me. The same thing is also reflecting in my $100 million current reporting. All my $100 million customers have got customers in America, UK, Europe, Latin America, and Asia. Currency volatility swing is so high that the drop in the 100 million numbers we are reporting, which is purely based on dollar, has dropped to nothing to do with the business, just with the currency fluctuation. So this raises the point, how much explanation are you going to give? So should we change all our reporting, even the client metrics into constant? I mean, there is a big debate to be had. And I hope that this kind of volatility doesn't exist or it becomes the norm. If it becomes the norm, then we have got to figure out how we are going to communicate to you every time. But these are the 4 answers. Hopefully you are not going to grill me with the 5th one.
Not really, sir. Thank you for this detail. Just for this year, will the constant currency and difference between the dollar and...
As I said, from October 15th to January 15th, I've lost 1%. I thought I will gain 1%. When we left last quarter, because the currency had run away, I thought we will definitely gain in dollar this quarter. That was my assumption. And dollar reporting we have lost. And we have lost 170 bips. That translates to 75 million. Repeat that for next quarter. On that base, 150 million, 90 bips, 1% gone. How do I answer you?
Akam Vakil Quint.
Hi. Well, I just want to ask you about any more initiatives in the new initiatives in the digital space moving forward. Do you see any opportunities? Can you tell us a little more about what are
new initiatives where?
New opportunities in the digital space and any new opportunities that you see?
I thought I talked about it at length. Digital, everybody is transforming digital in a much larger scale. It is no longer about developing mobile solutions or cloud or whatever it is. It is a broader framework. Every company is trying to change themselves to be an agile DevOps company. And people are focused on transforming themselves to be a data-driven company, which means everything has to get plugged. Everything has to be connected. All back-end and front-end has to be connected. Once it's connected, they become a data-driven company, then they are a real-time company. Then they are building analytics on top of it. Once they build analytics, they use machine learning. Then they get insights. Once they get insights, they can put bot on top of it so that they can respond to whoever is the user, customer, consumer. So it's a big story. It's a big opportunity. I think we are investing in all the areas, all the different pockets. We just need to realize realized that opportunity, and it is partly on what we do and partly on the pace at which customers move.
And can you tell us a little more about the kind of conversations that you're having with your clients in the US and the UK right now about, say, over the next year? The whatever you can say about
As I
the
said,
outlook.
it is about, I said, there are two tracks. I mean, there's always a regulatory track, but there are primarily two tracks. Digital track, another one is consolidation track. Consolidation is all about managed services. It is about automation. Okay, whether it is a BPO level on a robotic process or an Ignio kind of automation, which is more cognitive in nature. And these are the two big opportunities.
Thank you.
Thank you.
Sheetal from Business Standard.
One question I want to ask you, energy and utilities vertical has grown at a healthy clip, 6% this quarter. So with the crude oil price also coming up, firming up a bit, how do you see that vertical shaping up going forward?
See, let's split energy and utilities. Our utilities business has been doing extremely well. And even the deal wins, this time they won and they've been declaring wins every quarter. They've been continuously doing very well. On the energy side, we were doing very well year before last year. Last year was pretty bad, and now they are an upward curve. So I believe that our energy and utility business is in for very good growth continuously for the next several quarters.
Okay, one question, Rajesh, on the margin front, if you could run me through the breakup of the margin for the quarter.
This time the margin, there's not much of a breakup. It's been steady performance. So we have about 10 bips impact due to exchange and 10 bips benefit from the operation side. So it's a very flattish kind of one. The bigger story is on the cash side. Our cash generation has been very strong. Our DSO has come down by 5 days from 80 days to 75 days. And cash from operations is at 7,900 crores. So that's been the bigger part. The margin has been fairly steady.
Thank you. Manoj from Z.
Sir, GDP of US is improving, is on improving trajectory, and you're talking about corporate profitability. How do you see this going forward as well in terms of IT spend? Is it going to revive, or corporate profitability पर आपका क्या view है in terms of FY 18 and 19 as well, sir?
Any growth in the GDP will be a tailwind for IT spend. So we are not assuming anything, but see, I think it's a mixed bag. You see, there are protectionist sentiments on the one side.
Sure.
And there are growth opportunities on the other side. I believe the president-elect has also said that they will be investing hugely into manufacturing, into digital manufacturing. Any such digital manufacturing opportunity will be hugely technology-driven. So there will be opportunities, there will be headwinds, and we've got to get into the specifics. Otherwise, what happens is that we get too much carried away by the negativism sometimes, and that's not good for anybody because we are not going out there and trying to convert opportunities. So I believe that you got to take the positive when it comes, and you got to face the negatives. And it has become a norm, a normal course of doing business to calibrate and operate on a day-to-day basis.
Sure, sir. We're talking about your retail business. I see this growing 10-odd%. So what has helped actually?
No, retail business grown 1.9% sequentially.
India. I'm talking about India. Sorry.
India, I had said that, no, there was a one-off last quarter which should have come, and that got pushed this quarter. So I said that you will see it in India, and that has come. Pradipta?
Anyone got anything else? If not, please join us for a cup of tea, and the TV guys, please come up.
Last question, I think I know your answer. Will 2018 be similar to 2017, or could it be better?
So you should wait till April, right? This is the April question. You just asked 3 months before. Thank you.
Thank you very much. Please join us for a cup of tea outside. TV guys, please come up.